So I drove over there. We eventually met with the owner and walked through the facility. It was your cinder block, spring-loaded garage door, kind of older facility. I think he was about 60% full, and the other 40% of the units had nothing but trash in them. With that being our first facility and even looking into getting into the storage business, we were a little hesitant. We were learning as we went. The self-storage industry we had no idea about before 2020, or knew about it, but knew nothing about how to run a facility. So we kind of just learned as we went, and there were hiccups and bumps in the road, but we kind of just got to kind of figure it out. I'm pretty sure we were on a wait list for a couple months after for about a year. I mean, we had probably 4 or 5 people on a wait list trying to get in there.
So basically we went from 0 to 6 facilities in the last 4 years, just bootstrapped it. We still self-manage it. And so that's where we're at today.
Welcome everybody to Self-Storage Income, and today we are joined by Steve and Nick, and we are talking with self-storage entrepreneurs here. They got started around 2001, and you know what? Let's just ask them. How's that sound?
Let's do it.
Awesome.
Yeah.
How's it going, guys?
Hey, how we doing?
Doing good.
Doing awesome, guys. Thanks so much for jumping on and hanging out with us and coming here and sharing your guys' story with, how you got started and where you're at today and what that process and progress has looked like for you guys. It's super, super valuable for people, not only hear from, AJ and I and the folks that we work with and around, but it's awesome getting guys in like you that can talk to, other experiences and share their stories and let people know that, there's a million different ways to skin a cat. And
you guys have skinned lots of cats. So, I mean, you are from Missouri. And we're from Idaho, so we get it. We know.
Just some Midwest boys, yeah.
Love it, guys. Now, I guess we can start real quick here. Just got to give a snapshot. Where are your guys' facilities and how many do you have? And then we can kind of go back.
Yeah, so born and raised in St. Louis, Missouri, both of us. I currently reside in Kansas City. Nick's still in St. Louis. There's a secondary market, kind of about 2 hours south of Kansas City, I guess south of St. Louis as well, right in between. It's an area called Lake of the Ozarks. Kind of became popular. The Netflix show Ozarks is what it was based around. But a huge vacation place, and that's where all of our facilities are. So basically we went from 0 to 6 facilities in the last 4 years. Just bootstrapped it. We still self-manage it, and so that's where we're at today.
I've looked actually at that market over the last 4 years several times. So feasibility studies and different things like that. So very interesting market. Love to dive in with you guys, but why don't you tell us why storage? How'd you get into storage? How'd you get there?
Yeah, so we both still work our day jobs. I was previously a registered nurse. Now I'm a real estate agent. It kind of just came to fruition. Nick's a CPA. And we were just kind of both investing here and there. I was doing some single family rentals. He was doing his own thing. And then I think it was literally this podcast, the AJ Osborne podcast, read your book, listened to the podcast, just started kind of getting the idea of self-storage seemed somewhat of a simple asset class. And 2021 started hitting the phone calls, cold calling down there at like the Ozarks, and connected with an owner, had 2 of them ready to retire, and met with him, walked through it, and then just ended up taking our first one down and went from there. So
love it, guys. Why we do this? Love hearing it. Now, what year was that you guys took your first one down?
2021 was the first time we closed. I think it was 2020 when COVID had happened and we were all kind of sitting at home doing nothing. So I guess Steven decided to get on the phones and start cold calling some facilities, and they just happened to be at the lake. I've been at the been going down to Lake of the Ozarks for basically my whole life, and we both have. My parents and families have condos down there for the last 30 years. So I've been back and forth from St. Louis down there on the weekends, and I guess Steven thought it was a good market to get in the storage of boats and RVs and whatnot. So he decided to cold call a facility in 2020. And I guess the owner was getting ready to retire and sell. So he called me up. I was down there that weekend. He said, will you drive over there? It was probably like 10 minutes from our condo down there. So I drove over there. We eventually met with the owner and walked through the facility. It was your cinder block, spring-loaded garage door, kind of older facility. And when we walked through it, I think he was about 60% full, and the other 40% of the units had nothing but trash in them.
Yeah.
They were running it just kind of your mom and pop style, kind of almost ignoring it. I know they had a bunch of delinquencies and stuff. So with that being our first facility and even looking into getting into the storage business, we were a little hesitant. So that was, I guess, the end of 2020, so fall or winter. And then we kind of held off. We didn't know what we were going to do. And then we kept running the numbers, and it just made so much more sense than like your single family where you do your 1% rule or your 2% rule, whatever you want to call it. So we were just like, okay, we need to think about this more because it just made so much sense. So we called him back in the spring of 2021. He had the facility at, I think, 90% occupancy then, had cleaned up all the delinquencies and all the trash out of the units, and made us an offer, came back to us at a price that was only like $5,000 or $10,000 more than the previous fall. And we were just like, well, thanks for doing all the work. We're definitely interested in that.
That's amazing.
Yeah.
Yeah, no, that's absolutely incredible. And I think that's a testament to not only stay persistent, but also like keeping that open line of communication. And even I've heard of some people even helping owners or sellers through that process of like improving the facility even before that closing happens for you.
Yeah.
That way you're just streamlining that time frame to be able to go in and capitalize on that value add. So dude, that's just absolutely amazing that you guys were able to connect at the time you did, kept open lines of communication, got the facility closed on, all that stuff. What did the initial conversations look like? And I'm just kind of curious, like terms, how you guys financed it, kind of just breaking the deal down, how that all went.
Yeah, so I think initially, I mean, it truly was a cold call. I think I probably heard it from one of the resources I was studying self storage through of try and hone in on a Google search review of the facilities with 2-star Google reviews, no website, stuff like that. So that's how we initially got it. He was open to obviously meeting, so we walked through it. We didn't know the asset class, but of course, Nick being a CPA, me doing some single family investing, I was like, once again, we underwrote it, analyzed it. We're like, this makes sense, right? But how do we actually take this down? So, perspective of this facility, like he said, kind of run down, cinder block. This one was 105 units. He was asking basically 330,000 at the time. I mean, he basically gave us a paper rent roll, which was about 4,200 a month that he was doing. So we understood, relative the financing of it, but basically we went to a local bank down there, walked in, no appointment, just said, hey, can we talk to the commercial lender here? Walked in, and she said, well, yeah, we could do 20 or even 15% down on this 20-year amortization. Of course, these were the glory days when interest rates were 4%. So yeah, 15% down, like a 4% interest on a 20-year amortization. Wrote a check each, took it down, learned the easy storage solution software, and kind of just bootstrapped it from there. So
Now, you've got this deal. I'm assuming a lot of these guys were delinquent, right? Like or did he get actually those people paying that all this was junk, or did he just clear them out?
yeah, there was definitely a handful still full of junk. I think, the first month of ownership, we decided just to get a dumpster, clear house, start fresh. As we tried to backtrack a little bit, like, hey, are there actual accounts connected to these trash units? And, how delinquent are they? And at the time they had another facility, which we'll get into later down this conversation, but they had two older ladies basically running as the employees, basically the communication, but nobody had ever been introduced to like, hey, you can pay online, you can do this. And so we basically tried to systematize it, modernize it. But yeah, it was a lot of, us just walking through the facility, connecting with people who hadn't paid, getting them on board. So yeah, a lot of sweat equity in the beginning.
Did you guys end up seeing as you implemented some of those new things like, online payments or actually making people pay to begin with? Did you guys see any drops in occupancies or did you have issues with any of that? What were some of the big hurdles as you guys took it over and started implementing these different systems?
I think people enjoyed it. I think they were kind of like, oh, well, there's another option to pay, because I think about 90% of them were just sending in checks or dropping off payments at the office that was down the road at the other facility that they had been running. So when we had a website and login information, I took all the names of everyone, put them in a spreadsheet, kind of created usernames and passwords, and we sent out letters to everyone and kind of sent out, it was almost like a welcome letter. And you'd get people responding, and then after a month or two, no one would respond, and we'd have to try and email or phone number or any way, like Facebook, we would be searching these people and try and message them, any way to at least get in contact to say, hey, new ownership group, here's the way we're doing it, here's how we're set up. And again, most of the people loved it, loved having the option. It's all kind of like a drawn out process of getting people on auto pay, getting their credit card. So it's a lot of work in the beginning, but once you get it all set up, it makes it so much simpler and runs so much smoother.
Is it start at $4,500 a month or something like that?
Yeah, roughly, approximately. Yeah.
Roughly. How much did you guys mention you put down?
So 15% down on a $330,000 purchase.
SBA?
No.
Yeah. No.
Oh, okay, perfect. Just local bank then. True, like
Yep.
just a
Yeah, they were right down the road. They're one of their bank locations is probably a couple hundred yards away from the facility. Actually,
That's honestly the best way to do it. It's shocking. I talk about this a lot. I'm like, people are like, oh, so do you just have like a relationship with a big bank? And I'm like, no, we use like local banks and credit unions.
Yeah.
They actually do the most commercial loans. They have way better. We go to like the big banks and I'm like, these terms are horrific. Like, what are you talking about? And I'm like, nope, you go to credit unions, little local banks. They understand the market. They understand the asset. They understand the land, what it's worth, everything, and they'll be way more competitive. So that's a perfect way to go about it. Now, that first year you guys had it, a lot of work. Did you buy this in the fall or the spring? Were you moving into the slow season or already in the busy season?
it was August of 2021 when
Okay.
it closed.
That first 12 months, how did that go? Were you able to actually clean it out and start to bring in more revenue and get that updated through that next spring? Or did it take a few years afterwards to really get that thing turned around and that income up? Lots of people are out trying to buy facilities, small ones that range everywhere from $300,000 to $4 or $5 million. They're worried about getting the money or having the financing. This is why we team up with Live Oak Bank, because they get this. They understand storage. We have them help us underwrite deals for our students and others. They are one of the best people in the industry when it comes to getting loans, especially small business loans. They can actually help the customers when they find the asset, understanding how much debt can I get? What's it gonna look like? That changes them from being a bank to being a real asset to the customer. We recommend Live Oak Bank to our students as well as others that are trying to get into the storage business. They have an in-depth knowledge of this asset class. It's more than a bank. It's more than simply getting money. They're actually an asset and a partner to them, helping them go through all the things that they don't know and understand.
I would say it was pretty quick. It's in a very good location at the lake. And again, we created our Google business page. We created our Facebook business page. We started putting out ads on Facebook Marketplace for units. So being in that location and then having the website up, everything like that they didn't do any advertising before. So as soon as people started kind of realizing, searching and all the searches. So we just tried to kind of implement that as quickly as possible and use that avenue to gain more customers. I'm pretty sure we were on a wait list for a couple months after for about a year. I mean, we had probably 4 or 5 people on a wait list trying to get in there. So we knew that it was a good area and a good market. So we kind of went with it.
Yeah. No, I think it was year one. I think it probably went as expected, if not better than expected, to be totally honest. Doing modern day stuff, asking for Google reviews, starting to build up the Google business page, having people automatically sign up through the website, and just day by day figuring out, okay, what's going to be our process of somebody moves out, who's sweeping the unit out, how are we overlocking units? I mean, it's a linear keypad gate system. So we'd go program the codes and, somebody signs up, give them a code. What are we doing? This and that. And, we didn't even do like a true formal inspection. We walked through it. The owner had just put new roofs on it. But other than that, we kind of just took a chance on it. We redid the asphalt. I think maybe that was year 2. But other than that, yeah, probably better than anticipated year 1. And obviously we wrote the check to buy it and just, built the reserves account anticipating, worst case scenario, but that day never really came for us. So knock on wood.
Yeah, that's incredible. You had mentioned, Nick, you knew this was a great market going into it. How did you guys, just getting into storage, identify this great market? I mean, you had this wait list, all this stuff, crazy demand. How did you guys work through that?
I mean, again, I had been going there, and I actually used to work down there during the summers at one of the restaurants throughout high school and college. So I knew that it's in Osage Beach, it's at the Lake of the Ozarks, and that market is kind of centrally located and probably the most commercialized area. And when Stephen started calling, we talked about this. It was all like the boat trailer storage, like just the simplistic. And then there's a ton of condos and apartments down there. Well, condos and apartments don't have basements where you can store stuff. So it's kind of a combination of all those aspects that was kind of like, okay, well, this is working. And it just kind of increased and increased. And we're just like, okay, again, we were learning as we went. The self-storage industry, we had no idea about before 2020, or knew about it, but knew nothing about how to run a facility. So we kind of just learned as we went. And I mean, there were hiccups and bumps in the road, but we kind of you got to kind of figure it out.
A huge competitive advantage for people that I don't think they understand is they know specific markets. A lot of people are like, well, if I can see this opportunity, others can. And why don't the big boys buy it? And they like talk themselves out of opportunities that exist because they just don't believe. And the first thing that I have to say is, when people do this, because they do it all the time, I did it. And I'm like, the idea that big players even are thinking about you or that market is generally not true, right? So first of all, you got to get rid of that sense. Like I thought, oh, if there's an opportunity, everybody must see it or know about it. And it's like, well, dude, they just don't care. The second thing is they don't. Like when you're in these smaller markets or these out of ways or markets that have very unique things like the Ozarks that fluctuates massively in everything from population to time of the year when people are there, where they are coming from. And I know this because we looked at the Ozarks. We did. And I had to always put some prefaces on it where I'm like, we see this, but that doesn't necessarily mean I can totally understand what's going on. We bought in a small mountain town, about 50, 60,000 people. And when you first looked at it, it looked like the square footage per capita was insane. It was like 25, 30 feet per capita. But then I'm like, but what they didn't know is if that's what you're seeing online and everything, that's not including residents that have second, third homes, everything else. When you included that, it dropped down to below like 9. So understanding a local market when you're in small markets especially is a massive competitive advantage. And the more unique a market is, the more the vast majority of people will literally just walk away because that equals risk. I don't really understand what's going on here. I don't know how to predict how it'll look in the future. So I love that you guys focused on something that was close, that you guys understood. I go here. I know there's demand. I see it. I know it. I understand it. Not just because I'm reading on some paper or, like we actually have knowledge. And then you went with that and lead it into that. How did that shape moving forward? So your next facilities, like number 2, you went, okay, for all intents and purposes, this went well, right? A lot of work, but it went well. What did you learn from that took you to number 2?
Yeah. And to go into your point a little bit further, obviously the opportunities that people see. One, I mean, we were direct to seller off market. So this one no brokers involved, direct to seller, making, doing our own due diligence, our own deal. And then 2, I mean, at the time, and we obviously, we didn't do a feasibility study. We truly believed there was a solid demand for this supply in the area at the time. But at the time, we were truly just number guys. I mean, truly, we were, what's the cash on cash return here type thing. But yeah, so we took the first one down, went well. I would say, I don't even know if we really would have scaled. Obviously, we have scaled. I mean, we like the asset class. Of course, it's access to capital, access to more deals. It just so happened this owner, who it was a 3 of them. They were, probably, I would say early 70s at the time. They were liquidating. They sold us that first one. So then we caught wind from the employees that they had that they were helping us transition things here and there of, they had this other facility probably just 5-6 minutes down the road. We met with them. They're like, well, they were talking about maybe selling this one too. We were like, well, okay, this is going pretty well. Let's have a conversation. So we met with that same owner who owned this other facility. Same thing. He drove us through it, gave us the numbers. We had a little bit more confidence of how to operate and underwrite a deal. And that one, yeah, he gave us the numbers. We were like, okay, done. We got to make it happen. So that's how number 1 and 2 happened, same owner within a pretty tight timeline. And we just had to make it happen. So
Can we dissect that a little bit? You talked about being able to hone in on the underwriting on that second one. What changed from how you approached the first one to the second one?
Are you a new self-storage investor and want to know what that facility is worth, what the risk is, how to underwrite it? Well, that's exactly what we do in a feasibility study. A feasibility study, we actually look at the market for you. We look at the finances, the underwriting, we show you where the upside is, the downside, and all the risk. That is actually what you can provide to banks to get capital and investors. It's a big worksheet which most banks actually require. So if you want to know what a storage facility is worth that you're looking at, come to us, follow the link in the show notes, and we will tell you.
well, one, we knew what we could get basically for financing. So at the time, we had never done a self-storage deal. So we went and got this loan, 4% interest, 15% down, 20-year amortization. Not bad terms for the time. So then, he gives us this basic rent roll. And at the time, this second facility, I'll just go straight into numbers. This one was basically 100 units, 4-acre gravel lot. And then it also had basically a 6,000 square foot warehouse that was leased out. So basically, he gave us the rent roll. Once again, just a paper rent roll. They were doing, I think, 10,000 a month, and he came out with the price of 750,000. So once again, we were like, well, if we know our numbers, the same expense ratio, they had these 2 employees that we were well aware we were probably going to slowly get rid of them because we know we can do this remotely at the time. We knew the financing terms. And so at the time, we kind of just looked at each other. We're like, well, where do we come up with the money for this one? Because this one makes more sense as well. So
I need to understand the time frame of 6. How do you break that down in 4 years here? Like, how did you pile in from 1 to 6 in 4 years?
It was basically every 6 months.
So it was pretty steady. Clip,
Yeah,
clip,
it
clip,
was pretty
clip.
much save as much money as possible for 6 months. Go put your down payment down. Save as much money. It was basically we were recycling any cash flow that we made from these facilities sat in a bank account, and we would roll it into the next one and roll it into the next one. And it was and Steven did all this by after we did these 1 and 2, it was basically let's cold call everyone down here and just see and just ask, hey, are you interested in selling? Are you retiring anytime soon? We're interested in buying. We're low. We have 2 facilities in the area. We're serious buyers. Let's see if we can make a deal. And it was August 2021, then like March of 2022, September of 2022, March of 2023, and then it just kept going September 2023. So it was
after number 2, I was all in. I just started hitting the phones hard. But then you have you can build a rapport of like, hey, I'm a local owner operator. At the first one, hey, I'm a new owner. I have no idea. I wouldn't say I have no idea what I'm doing. I would never say that on the phone. But you take it down, and then I get on the phone calls like, hey, we own 2 down the road. We're local. We own and manage these ourselves, own and operate them ourselves. It's just easier to have the conversation. Then they trust you a little bit more. And so, yeah.
Now, you both had jobs. Do you still have jobs? Are you still working your full-time jobs?
Yeah.
Yes.
Love it. This exactly what I did. I scaled up, right? We had 12 facilities, I think, before I quit. I didn't really quit. I guess I got fired while in the hospital, but just same difference, right? Totally planned that. But yeah, we did the same. Me and my partner, we did the same. So we were working. Now I want to talk about that a little. There's a few things that hearing you guys talk about what you've done that I really want to harp on because I think it makes the difference. So when you get down to it, there's a few things that I'm like, when I see people that can do these things, I'm like, you're going to be successful. When you are okay, literally just cold calling and knocking doors. If you are fine asking for money, whether that be a bank or investors. If you are comfortable negotiating, meaning not taking something as it is, but say, no, hold on here. Let's make a deal. Like I'm not waiting for a listing that has a price and I say okay or no, right? Because that's not how it works. Working a job and building a business at the same time. And then, being embarrassed and failing in public. If you can do those things, there is almost no business there's almost no industry that you can't be successful in. And they are so core to success, right? They are the little differences that nobody else will do. It is literally the 20% that nobody else will do because it's either hard in the short term, it's really uncomfortable, or just beliefs, right? Like I shouldn't be doing this. This isn't the way it is, or that's not how it's working. And it truly is. That's how you guys got to 6 facilities. You're working 2 jobs. You're going out. You're negotiating. You're knocking on people's doors, asking them to give you their assets. You are learning quickly. You're literally okay, obviously failing and putting all your work and everything into it. This path allows you to not just succeed, but to scale really, really quickly. What was the hardest part, though, about getting started, knowing you have to do this all yourself? You have to work jobs. Like, where did you guys find the most difficulty? Was it actually knocking on the doors? Was it the belief that, oh, we're going to do this and it could fail? Not only that, 6 months into it, we're just going to do it again. Well, we don't even have a guarantee or full knowledge that it's, and then let's just keep doing it before the other one's even full cycled or played out. Where was that rub for you guys?
I think I'll flip it and say where the confidence was built, I would say in having a partner. Because I'm not doing this by myself alone. Like I'm not going and fixing the facility up on the first one, answering all the phone calls. I'm not doing everything alone. Like we go back and forth, like we talk daily. I mean, obviously, because we have all the questions from the tenants, like, oh, what happens if I can't pay this month? When do the auction stuff? We went back and forth and kind of fed off each other. Steven took the phone calls, and then I was down there most of the weekends because I would travel down there because I had our condo. So we were able to kind of feed off each other, and then that was, I think, the confidence builder and made it a lot easier to even get into the industry itself.
Yeah, I mean, I think obviously starting, I don't think either of us probably thought we were going to scale it to the to the point we did, but when you get a good deal in front of you, you just kind of need to take it down. And for us, like you said, I mean, it's just a huge delayed gratification play.
Yep.
You know, we're both, working this way. We're employees in our own business. You know, it's a second job for us, but it's not going to be like that forever. We're fairly young at this point still, but we know down the line we're going to reap the rewards of it. But
I always laugh at that because, like, when you say that, we're young as 4 years. When I talk to people and talk about delayed gratification, most people are like, hey, I'm okay if it doesn't pay out for a couple of years.
oh yeah,
And I'm like, couple of years. And like, well, yeah, I mean, how long to a year? I'm like, I worked 2-3 jobs and didn't get paid any of them for 15 years. Like,
oh yeah.
we have a very different idea. Not just payout. I worked at them for a decade plus, right? And I think there's a direct correlation to your ability to work and not get a payout or a guarantee at a level that most people don't want to work ordinarily for the longest period of time directly correlates to how big the payout will be. And you guys obviously have that mindset.
Yeah, 100%.
I think the biggest misconception with self-storage is, oh, it's passive income that you buy the facility and you just collect the cash every month.
Yeah.
But self-storage is way more of a business than it is just a passive real estate investment.
Love you guys. I love you guys. You're my brothers. I love you guys.
Yeah.
Speaking our language, man. No, it's like we joke about that stuff all the time because that is the perception and the idea. I mean, even just real estate in general, I feel like is like, oh, it's this super easy and passive thing, and it's just people don't think about how much it takes to go through and manage it. I mean, let's say on average, you guys have about 100 units per facility you've got, and I mean, shoot, at 6 facilities, you've got 600, let's say, tenants. That's 600 customers that you've got. That's not talking about, that churn of, 10, 12% of customers every month that you're going through and having to replace, and in the logistics of managing the day-to-day operations, the maintenance, all the different pieces, the marketing, getting those people, getting the leads, all of it. But something that I noticed when you guys were first starting to talk about finding the deals and how you started improving operations and some of this, You guys are just super methodical or seem very methodical where you're like, hey, well, here's this problem. Okay, well, here's this solution. Okay, here's this problem. Here's this solution. Like you talked about not having all the answers when you went into it, not really having done it before, not having all the information, but you guys just identified, okay, well, facility doesn't have a website. Let's get a website. Like, okay, well, people aren't on auto pay and can't pay online. Okay, well, how do we do that? Okay, well, we just need to do X, Y, and Z. And so I think a lot of times, man, especially people just starting out, we like to complicate things so much, man. And it might be some kind of mechanism to help us avoid risk, like we just don't want to do it to begin with. Or it might just be that we're overthinkers, overanalyzers. And I think it's just a testament again to you guys too. And in this concept of like, don't overcomplicate something. Find demand. Does the revenue and the expenses, do you end up with some net cash flow? Like, does that all work? Is there upside? Is there not? Or do you have good terms on the loan? Do you not? Like, what are the problems? What are the solutions? Like, it's not linear and it's not easy, but a lot of times it's a lot more simple than I think we like to make things.
Yeah.
Definitely.
Yeah.
Interest rates, guys. You guys got started and walked into the hardest period of storage we've seen. To put it into perspective, I like to tell people 2008. I went through 2008, went through now. 2008, we dropped to about maybe 70 to 65% occupancy, but rates went down maybe 10, 11%. Today it's over 30% drop in rates, even though occupancy has been remained. But we're talking about 3-4x the rate drop that we saw in 2008. Housing stalled out, it's hard to get. So, that was there too. You're buying deals, and every time you're buying deals, that interest rate is going up and up and up and up. So it's not just the effect on your customers, on your market, it's also the effect on your underwriting to buy new deals. You went from, free money to the most expensive money we've seen in all of our lifetimes. So walk me through that. How has that affected your business as well as your business plan, like your acquisition strategy and everything?
Everyone back in 2020 or whatever was selling at 5 caps, let's just say. So now everyone still wants to sell at those same 5 caps.
Yeah.
But it's like, I can't make a loan work now because interest rates doubled. It doesn't work. So we come up with our number, and we're not like afraid to negotiate or stick to it. The most recent facility we closed on was this last April, and I know Stephen had reached out to the owner a few years ago and kind of said, here's, like, if you're interested in selling. He said, sure, I might be, send me the number. So we sent him a number, and he kind of countered with a number that was way too high, that we would be losing money each month if we went and got a loan on it. So he went to a broker, listed it online or whatever, and for even more money. And it sat there for a year and a half, 2 years. And then we came back to him while it was on the market and said, hey, we're still at our number. We're interested in negotiating, but you got to come down. So we ended up buying that facility for near what we had offered him years ago and way less than what he had been on the market for. And it's kind of like you have to stick to your guns a little bit at a certain point, because we're not trying to buy a facility to lose money each month. So we can, but I'm not saying we need to hit a home run and buy your best one, but it just has to make sense.
And on that deal, he did a 10% carryback seller finance or deal at a lower interest rate as well. So that always helps too, to pitch that.
That goes back down to both of those factors you just mentioned. Go back to making the deal. This can be a really hard thing for people to understand because we're used to like housing transactions, but we are as a society trained for consumerism, which means here's the price of the bag of chips, you pay for it, right? I don't go walk up and be like, I know the chips are $4, but I only want to pay $2. And that's like, they're like, then put them back. What do you want? What are you talking about? So we're so trained that a price equals value. We do not understand that that's not true. And so outside consumerism, that is not how the rest of the world works. And so when you look at prices, when they hit the market, meaning, oh, he lists the price. Oh, it's $4 million. Well, it's not worth that. So I'm going to move on. And you're like, but that's not, they don't sell at that just because the guy wants it. That's not what a market is, right? So, and I've mentioned this over the last 3 years now, I have not only bought a deal, but I haven't seen a deal that traded at its listing price. And we're talking like 40% below sometimes what the listing price is that it trades at. And so most people walk away. They see that and they're like, that is insane. I can't, I'm not for that. And then somebody buys it and they're like, who's the idiot that bought that? Well, they bought it at 40% less than what you thought, so they're not an idiot, right? And then the next part of that is, okay, I'm going to negotiate on how to make it work. So we don't just accept that it won't work at all. Both of those things come back down into the fact that you are creating opportunities, not waiting for them to be handed to you. And that is the most important thing that I've seen. And I know you guys obviously have too. When you're going out and discussing with owners today, with interest rates this is not only a negotiation, this is a revamp of value, capital stack, payments, right? And you got that owner to a place where he could make it work for him and you in a period of time that if not, he probably couldn't make it work. So is that something that you see just more common as you move forward? Are you having negotiations today? How receptive are you seeing the marketplace be to more in-depth discussions on price, capital stack, payment structures, things like that?
Yeah, and going into it all, I mean, obviously talking interest rates, I mean, I can tell you recently, our very first storage facility that we kind of alluded to and broke down the numbers of, I mean, that one, we had a 4% interest rate, it had a 3-year term, so 2021 to end of 2024. I mean, we just had to refi that one, so that 4% went to 7.5. Luckily, we had bought that at such a deep discount that it still makes sense for us. So, we're always talking about how much we want to scale. Obviously, just being, I mean, we almost consider ourselves mom and pop owners. Just to give an oversight to our whole portfolio, I mean, we're at 150,000 square feet. All 6 of these facilities are within 10 miles of each other. So I
Amazing.
get people all the time of, do you want to reach out to a new market? I mean, Nick, you probably agree with me right now. Probably no. We're trying to figure it out. One of our largest facilities, we have some outside capital involved. We're coming up, I think we're about 2 years out from like a refi where we'll pay them off and take full ownership. So just, I mean, we want to scale, but we want to do it efficiently and make it make sense for us. If deals come across our desk all the time, I'm still cold calling, but like we just talked about, yeah, they want a certain cap rate that is lower than the interest rate I'm going to get at the bank. That doesn't make sense. That's not a good inversion to be at. And of course, they always throw out the idea of like, oh, there's expansion potential, and that always costs more money. We've never developed. We've always bought existing. We like to see an 8 cap or better, to be honest. And that's preferably with some value add. One of the facilities we bought was solely 100% seller financing, no bank involved. So, I don't know exactly where we're going with our portfolio. We take it day by day, but we'd like to scale in theory, but once again, we're just trying to build these systems that allows us to scale. Because to take on another 100, 200 units, we're gonna be treading water trying to do it ourselves again. So I mean, we do have one employee that helps us out at our bigger facility, but other than that, yeah, we really haven't gotten into the weeds with negotiating. But same thing. Another facility in our market, I had met the guy back in April. He gave me an astronomical number. Well, I mean, straight to his face, I'm like, look, this is where we would be at. We're pretty firm there. No pressure either way. He called me about 2 weeks ago, like, hey, you still interested? So maybe people just finally realizing kind of the supply and demand. Supply has increased in our market quite a bit. So factoring that in, higher interest rates. We're pretty steady in the last couple of years at anywhere from 90 to 95% occupancy. And that's with a gentle rent raise, typically in the dead of winter. Nothing too aggressive, but we're staying occupied with just slow rent raises. But we're watching the market and see what happens with supply and demand. And I know there's another facility in our market coming for sale, and I was told they have debt coming due that's going to really change kind of the pace of play of their facility. So
Right now, the fact that you're occupied and you are getting rent raises, that's amazing. That supply and demand issue tied to interest rates, it is reshaping owners' expectations. For us, especially when we're dealing in a little bigger facilities, that we didn't see that at all till this year. I mean, we bought in the first quarter more than we'd bought in the previous 2 years. And we're buying more in this fourth quarter. We've already under contract on some big ones, but I got to tell you, that gap from what the sellers wanted and the buyers was astronomical, right? And so the deals that we are finding, like you said, they are deals where there is a trigger. And I talk about this a lot. I do not like trigger events, and trigger events, which I just mean it triggers the market value to come into play. Financing, that could be refinancing, that could be contract terms, that could be investor payout, appraisals, where the market value actually plays into the asset. That's dangerous because, it's learned in 2008, where I didn't understand why people lost their assets when they could pay their debt. Starting out, we owned some facilities and I was in sales and do business. That didn't make any sense to me. I'm like, I don't understand. And they're like, well, it was worth 2 million. It's only worth 1 million now. And I'm like, but they still have the same money and they can pay their debt. So what is this market like? What does that have anything to do with anything? But it does. And so you get a lot of owners, like you just mentioned, where we're now coming up. Not only is my interest rate going to go up, but because the value of the market, or what the market would pay, meaning it went from a 5 cap to an 8 cap, so it's worth less. My money hasn't changed, but because of that, the bank's going to say, you had a debt, you had 30% down, right? You had, whatever that is, 70-30. Now, because it's worth less, technically, it doesn't work anymore. And so you have to put money into it. So now they're looking at it like a situation you have. They may be sitting here going, oh, it's just not about my payments going up. I may have to put more money into it, even though nothing's changed at all. And that's where we're seeing a lot of the value adjustment occur, because not only is that value adjustment real to them, they have to pay for it. And so then all of a sudden, well, I should just sell and take money out as opposed to having to put money in. So we're seeing a lot of that taking place, and that is restructuring overall values in the market. And it sounds like you're seeing the same thing.
Yeah, I would say, and that's the thing about like making offers and just keeping in contact, because I know that facility, one of the facilities that's coming for sale, has been for sale, and they were asking a crazy amount. But I know we came to them with a reasonable offer based off of their current rent roll and what they were doing. And you know what? If for some reason they reach back out and say, hey, we might be able to get close to that number, then that might be an opportunity. But let's just say that was a year or two ago. Like, it's just because you were said no to the first time, it doesn't mean in the future something's going to change, whether that be a health issue or the owner, because I know the owner was moving out of town of the last one, so he was ready to kind of retire and move out. So it's just different things like that, of like, you never know what opportunities may come from previous conversations that didn't work out.
All right, guys, where are you going to go? You mentioned how you have to move forward changing, right? I feel that. I did the same thing. 6 facilities. We were like, oh no, how we want to grow doesn't work how we did. We literally had to change our company, our structure, everything else, to go from 6 to where we wanted to go. Like I said, you guys are my brothers, feeling the same pain as I did, and so we've walked that same path. And I went through this same issue that you did with 6 facilities. As interest rates were changing, everything else. So eerily similar here. How do you guys move forward now, and what are you trying to achieve?
Well, I mean, we're young. I'm 29, Nick's 33. We're holding on to these forever. Probably for the foreseeable future, for sure. We bootstrapped it. We're still self-managing. I know both of us. Nick just had a newborn child. I just got married, so some life changes.
Congratulations, both of you.
We're trying to make it to where, and I think the biggest thing is, once again, we have some outside capital that in a couple of years we'll do a refi, pay them off, so we have 100% ownership. So that involvement, because right now, really, when we scale, we're not raising capital. I don't know if it's really on our plan to really scale. We have a solid line of credit that we have against equity. We prefer that just to keep it all in-house.
Yep.
We like the idea of a small but mighty portfolio in our little 10-mile radius at the time. But I think just for us both, I don't want to keep answering phone calls for the rest of my life. Nick doesn't want to keep cleaning out units. So we're just trying to figure out, do we vertically integrate? Do we just hire management? How can we actually make this really a passive thing? But Nick, any insight there? Yeah,
Yeah, I would say, I know we've talked about it 100 times, that at a certain point, the two of us can only do so much and be in so many places, especially while still working. So if there are new facilities that pique our interest that we want to buy, we're almost getting to the point of, okay, let's start gradually integrating some outside management to see what we can do, whether that be like a maintenance man that's on call or something like that. Because we have an office manager right now at our one facility. So we were thinking about raising her pay and giving her and starting to transfer some of the calls and some of the tasks over there for her to handle. So it's kind of just a gradual process of, okay, if we're going to keep going with this, let's figure out how we can do it sustainable, with us two being kind of more in the background and managing the people that are running everything. So we'll see how it goes. I wouldn't say it's not going to happen overnight, but we are in that process.
Well, you guys are lucky, because when we hit that point, there was no even third-party management. So for us, it was now the decision of like, what do we do? Because if we want to start hiring people, obviously our income goes down. So we had to do the whole equation of, all right, we need to hire people, but then we need to buy more to offset that. There's a certain break even where it's like, in order to maintain the margins, how far do we have to go through? So we ended up, we were in a position where it was either you vertically integrate or sell if we didn't want to do it, work. So you guys do have a lot of options, even with technology and everything. So that's really exciting for you guys. So I'm excited to see what you guys do and how it works out.
Yeah, it's been a good ride. It's, the portfolio is our baby. We're scared to let it go, but we know we got to outsource to live life. So
Yeah, well, I love how you what you called it, your small but mighty portfolio.
I like that. That's a perfect way to build out a localized storage portfolio.
Yeah, it's the economies of scale are nice there, because if somebody calls and we don't have something available at one location, and like, hey, are you okay driving an extra 7 minutes down the road? We got something available there. So,
well, you think on valuation too. You've got that proximity, and you have such a large market share in a small area like that. Roll up value, that kind of stuff. That's huge.
Yeah,
ability to move markets and rates.
Yeah,
right.
We've done that, and that's really good. So, guys, hey, we won't take all your day. We really appreciate you coming on and telling everybody, how you got to where you were, what made the difference in it. Where can people go to learn more about you guys, if they have questions or just want to understand you or your company?
Yeah, I think for me, Instagram's probably the best. It's just at @StephenMay_real estate.
Yeah, and then our website's lakeoftheozarks.selfstorage.com. Or you can call Stephen on our business cell phone so he can get more calls.
Perfect.
I won't give out that number then.
Perfect.
Drive up that call volume.
Yeah. Right.
Wonderful. Well, hey guys, thanks for coming on. Appreciate it, and best of luck to you. And now you got the downward slope of interest rates to enjoy over the next 5 years. So,
yep, looking forward to it.
Thanks, guys.